Hello, everyone. I'm back again. Today, I want to just do a short video for us. Today is Friday the 10th January 2025. This video is not a long educational video, but it's one of those short videos. There are some of the followers in my community that is starting that are already trading, and as a result have been impacted by what is happening in the market. So I'm just talking to those people that are trading already, so there is no basic information that I'll be talking about. I just want to talk about where are we by the close of this week. So by the close of this week, certainly the crypto market has gone down significantly on the levels that it was at a couple of weeks ago. And if you look at your psychological chart, because I'm talking to people that I hope like they've been around, you would see that we've gone through the stages of belief, hope, euphoria, all the way to the retracement levels where we are at the moment, where people have lost hope. Some are talking about exiting because of the huge losses that they have made. I mean, some tokens have gone as far as 60% retracement all the way to the bottom, and where the market is at the moment, we are not quite sure of where the market will end up. And as a result, what I have done as well is I've just decided to pull back and just monitor the market in terms of what's going to happen, to unfold. If I just do a summary, if you take what has happened last year, which is 2024, and what happened a year before last, which is 2023, don't forget that a year before last, 2023, it was a number of events that were taking place. One, in January of 2023, we were dealing with the whole issue of the Securities and Exchange, the SEC in the US, having to make a decision about whether they are going to approve the exchange traded funds for BTC, which is for Bitcoin. So the ETFs were approved for Bitcoin, and therefore there was an expectation that there was going to be an influx of the fund managers, but especially the mainstream traditional pension fund managers. But however, you also had in April of 2023 the Bitcoin halving. This concept, when I get to the building up of our intermediary, I will explain what they mean, but those who are trading understand exactly what has happened. So you had the ETF, BlackRock's application approval, and a couple of other fund managers like Grayscale and others, and then you had the halving. But then we still had the problem in the industry of Operation Choke Point 2 from the White House or from the administration. And therefore you had this challenge of active initiatives that were against the market. But you also had Mt. Gox. Those who've been in the industry would understand the impacts of Mt. Gox. But then towards the November, Solana started to really take off, and we saw the beginnings of a bull market, and there was a lot of excitement, and that went into 2024, which is last year, and that was the elections year. And in the election year last year, you started to have the campaigning in the US in full swing. But while the campaigning in the US was in full swing, you started to also see the impact of these conflicts, these global conflicts, the Russia-Ukraine war, the impact of what happened in Israel after the October 7 attack from Hamas, and then the retaliation or the actions that followed thereafter. And then there was the impact of the Iran Iran, the State of Israel exchange. Here I'm not talking politics of who's right or who's wrong. I'm just talking about the impact of the geopolitical events on our market. So these things had an impact in terms of the movement of the market, in terms of confidence. But then also you had MicroStrategy deciding to acquire more Bitcoin. Certainly, after the endorsements of the candidates, whether it was the Republican National Convention or the Democratic National Convention, you had the Democratic National Convention which asserted President Biden. You had the Republican National Convention that also asserted former President Trump, who's now the president-elect. And when the campaigning started to go in full swing, because the chairman of the Securities and Exchange, Gary Gensler, was more close to the Democrats with Elizabeth Warren and others that seemed to have had an influence. That's what we've picked up in the market. There was a tone that was frustrating the crypto market, and therefore others were regarding it as an anti-crypto tone. But however, if you looked at the Republican candidate, President Trump took an approach that is pro-crypto. He attended the Bitcoin convention or conference in, I think it was in Las Vegas, where he publicly spoke about his endorsement of crypto and the actions that he was going to take. He seemed to have been definitely on line with the frustrations that the market had around the decisions that the SEC was taking and some not taking, investigations that were not really being finalized, the definition of whether are you saying some tokens are securities or they are not securities, because these had an impact in terms of the regulatory requirements and therefore also the adoption on some of those tokens. So there was this impact in the market. But when President-elect Trump, who at the time was former President Trump, a Republican candidate, made overtures towards crypto, crypto embraced him. There were a number of crypto players that actually provided support into his campaign, and some crypto players also endorsed the independent candidates such as RFK Jr. So at the point where the first debate took place, there was confidence that President Trump seems to be on the right path, because President Biden didn't do very well at all. I think the Democrats had to go, we all know that's history, had to go into the drawing board, and then they came with Vice President Kamala Harris as the candidate. So there was this choppiness in the market depending on the issues of the day, both at the political or geopolitical level, at the SEC level in terms of the regulatory level, as well as the trading volume in terms of the market itself, its own dynamics. However, when President Trump won the elections decisively as he did last November, the market was at euphoria stage if you really go and retrace on the market psychology chart. And the retracement that you've seen now, it has really gone down, and to a point where people are disillusioned. But we know all of this. It's part and parcel of that psychological chart. So where we are now, I just wanted to round off this week. My position Certainly, my position this week is driven by a number of things. A couple of macro economic data came out in the market. For an example, the non-farm payroll came out. It was at 256,000 against 165,000, which is what was expected by the market and anticipated. The unemployment rate in the US was expected to drop to about 4.1%, and it came out at 4.2%. So the labor market seems to be stronger than expected. And this is one of those things that, as much as it's the good news, however, in terms of us, the traders, it has an impact. What is the impact? The impact is the FMOC has been lowering the interest rate. So we've been in the downward trend of the interest rate, and it's been driven by the macro. Certainly, I mean, you would hear the political pundits when they talk about the results of the previous US elections. They will talk about the impact of inflation on ordinary Americans and how this thing really affected and turned the voting fortunes. So we know that they had to arrest inflation because they had this problem around some of these indicators that Chairman Powell would use as the basis on which he makes a decision, or they make a decision collectively as the FMOC. So what has happened now is the numbers are coming better than expected. So when the numbers are coming better than expected, chances are it's either the FMOC will slow down on the reduction of the interest rate going forward. There's an estimate that says maybe there could be one interest rate lowering this year, and that would be post June, but it's too early to say. So the most important period for us, just for us to be able to see what the macro is really playing out to be, would be next week. Because next week, the CPI and the PPI numbers in the US are going to come out, and definitely we are going to be able to see where the inflation is at. And the inflation is the driver of the FMOC policy. So we're hoping that the inflation numbers will come in a trend that continues to give the FMOC reasons to lower the interest rates. But however, this is what is taking place in the market. So some traders are despondent, and some traders are saying this is the opportunity for them to go and short. I'm neither doing the two. I'm neither despondent, and I'm neither shorting. For me, the current fundamentals in terms of the macro is not giving me a definitive perspective that will help me to have a high conviction that this is what the trend will be. So I've adopted a wait and see, but conducting a lot of analysis to understand where the market is at. There are some retracement on some of the tokens that are taking place. The problem is we don't know how long-lived is that retracement. So if you look at the momentum, so if you look at the volume of how these trades have sort of retraced to the bottom, you've had a significant momentum going down, and often sometimes that sometimes give you an indication of the retracement pattern, that the retracement pattern would be a little bit stronger. Some are seeing cup and handle in some of the trades. But however, for me, I'm not yet 100% sure. And this weekend is my weekend where I'm going to go through a lot of my analysis, both on the fundamental and the technical. I think the technical is going to be where I lean on the most and retrace a lot of my trades. But then it becomes an opportunity for me also to clean up my bag and see what positions I will be taking. Certainly, the position I'm in and I would motivate for is not to take any leverage position at the moment, not unless you've got a high conviction, and certainly you have a huge insight into a number of assets that you think you would take a leverage. But an ordinary trader like me, I wouldn't take a leverage. Where I have strong conviction, I would take a spot trade, not a leverage trade. So you can still take a spot trade, a 3x spot trade, not more than 10x spot trade, depending on which trading platform you are using. So that's what I would be doing, and therefore that's the take that I have in terms of where the market is at. But I'm strong on let's take it easy, let's calm down. This is the time to do more fundamental analysis. This is not the time to be despondent. This is not the time to be edgy. This is the time to calm down and be patient. This is the time now to go and understand some of the retracement reasons. So you've got the huge and high fundamental reasons that affect the general market. But however, once you start to go to various tokens or various asset classes, you would start to realize that some asset classes, some assets are more affected than other assets. And then the more time you spend on why, you will then understand why others have lost the most, and therefore where the retracement positions are likely to be based on the specific asset that you are looking at. So that's my advice. The fear and greed, if you look at the Nasdaq and others, it's really low. The market is more fearful than it is greedy, and these are the indications that the market is not yet at that point where everybody goes and gain in confidence. Here's the thing. I've been saying in the past in my beginners and basic episodes, there is no one analysis that talks about the market as accurate as it is. You get some traders, two traders, who will have views strong on some aspects of their views, others are strong on other aspects of their views, and therefore they will take different positions. And you may find that they may not necessarily be 100% wrong, depending on the choppiness of the market, because the market is never a straight line, and then you would say, no, there's one trader that is right because the market is going all the way down. There's choppiness that you would find, and therefore, depending on which trader you are a scalper or what type of a trader you are. So some traders might be making money depending on their trading strategies and the exposure that they've taken. So please don't discount what others are saying. Don't take what I'm saying as if it's the absolute truth, but please be careful. If you are not advanced in trading, be careful. Don't be emotional. Don't revenge trade. Don't assume it's the bottom. Make sure that you've got enough fundamental analysis that backs your conviction. Test, stress test, and confirm and reconfirm your fundamentals. Same thing as you would have to do on your technical analysis. You are limited by what you can do with your technical analysis, because if the RSI is where it's at, the RSI is where it's at. If the moving average is where it's at, that's where it's at. If you do your fib will be your fib. Your support and resistance will be your support and resistance up until you see which one you are breaching. Are you breaching your support, or are you breaching your resistance in terms of the trend? So it's important that you use all of these tools of analysis, whether it's the technical tools or it's the fundamental analysis. But please don't rush into conclusions prematurely. But I can tell you at the macro level, there are some important indicators next week that are going to help a number of traders, including me, to have an idea where things are going. Remember, next week it's the inauguration of President-elect Donald Trump, and the inauguration of President-elect Donald Trump is a a positive in the crypto market, because President Donald Trump, or President-elect Donald Trump for now, is seen as a pro-crypto president, and as a result there is an expectation that he might make significant decisions. Certainly he has been going around and saying those kind of things, and therefore this is the time for you to go and look at the various emerging themes in the market that are potential areas of focus. So what I mean is, look at the narratives that are taking place. Certainly there's a strong narratives of the AI agents. Towards last year, there was a strong narrative of real world assets. And there's the gaming narrative that is also taking place. There is still a decentralization narrative, certainly the TPS, transaction per second, as well as the low transactions. Certainly, I mean, you see Solana is moving, Sui is almost starting to come close to Solana. And there's been a meme narrative that has been taking place last year, so I don't want to discount that. So spend more time on these narratives, because it's going to give you an idea of where your conviction would be when you then re-enter the market, or you take positions now, because some traders are saying this is the time when everybody is going. This is the time to take positions, but you have to decide where, at which point. Some trades that I've looked at in some tokens, there were some breaching of the trend line, and therefore you can do your Fib analysis and see that breach of the trend line. Where do you expect it to be in terms of the Fib level? So you can do those analysis that would sort of like help you to have an idea. So I just wanted to give you a quick rundown of where the market is at. Please like and subscribe. Comment down below. It's important for me to get your comments, but I've been doing the basics to a point where now I've had a request to say, just give us a market round off for the week. So I will do this market round off just at the end of the week, so that at least those who are currently trading can have an idea where the market is at. Other than that, peace. I wish you all the best. Have a wonderful weekend. Use the weekend for you to do your analysis, go through the various narratives that we're talking about, so that at least by next week, the opening of the week, you have an idea in terms of what you are going to do. In crypto, we do not have an opening of the market. Our market is running 24/7, so we never sleep. We are always analyzing the market and following the trends. And I hope in everything that you are doing, you'll be cautious, but not cautious to an extent where you don't do anything, but cautious to an extent where you have calculated risks, and therefore you take strong conviction trades when the market is the way it is. And now don't chase the trades all the way down, and use conviction. And when you use your conviction and you decide to take trades now, please make sure that you have your stop losses made immediately as you take your trade, so that you know you can't retrace below a certain point, just to avoid liquidation. Okay, let me not make it a long video. Thank you very much to those that have been supporting me, have been providing comments, and also who have liked and subscribed. The community is growing. I hope that at some point we will be talking about the gains that those who are following us are starting to make. But I wish you all the best. Stay positive. Don't do anything out of desperation. Trading is something that you will enjoy over the course of time, so long as you allow yourself to relax, and just make sure that whatever you do is based out of the analysis that you have made, rather than it is based out of hearsay or the shilling that is taking place in the market. Have a wonderful weekend. Cheers. Bye.